What if the whole market sinks? Diversification won't spare you from a 50.9% drop in the Dow like in 2008. Diversifying. When I think of stock diversification, I think of investors putting their money in multiple companies across multiple industries to maintain a certain level of return. For example, investing in an S&P 500 index fund is one of achieving stock diversity since it invests in the 500 stocks that comprise the S&P 500 index, which includes a cross-section of companies across 11 segments. A diversified fund like an S&P 500 index fund allows retail investors to achieve returns that track the S&P 500 without having to buy shares of all 500 companies themselves. And in my opinion, an S&P 500 index fund illustrates perfectly how stock diversification works. By spreading risk across multiple companies and multiple industries, expected losses by some stocks can be balanced with gains from others. It's a balancing act, right? That allows investors to maintain a certain level of return. However, a diversified fund like an S&P 500 index fund also reveals the flaw with stock diversification. What if the whole market sinks? Diversification won't spare you from a 50.9% drop in the Dow like in 2008. So the role of diversification in passive commercial real estate investments is very different than the role that it plays with stocks because the end game is different. The objective of investing in passive commercial real estate investments is to compound wealth, not to merely maintain a certain level of return. So you can think of passive commercial real estate investments as part of a wealth building machine that feeds off the cash flow from a portfolio of investments. As you feed that machine with cash, it compounds that cash through appreciation and reinvestment. Unlike with stocks, where diversification won't save you from a crash, diversification in the passive commercial real estate asset class has proven to insulate investors from downturns, protecting their wealth building machine. Because investors can diversify commercial real estate assets across different geographic markets, asset classes, property types, and investment strategies, the right mix of properties will ensure uninterrupted cash flow which is essential for wealth building. With the right assets in the right markets, income may dip with some assets, but income doesn't just come to a screeching halt. This is because people don't just stop needing housing, and businesses don't just stop needing offices or warehouses overnight. And because commercial real estate assets are illiquid, owners don't just unload them in a crisis like with stocks, driving down their values. What the financial crisis of 2008 and the latest pandemic-induced crisis has taught us is that not all markets and not all assets are equally affected by downturns. Some are more resilient than others. The key is not to have all your eggs in a single basket, where that one asset in one market may be adversely affected by a recession without other assets in other markets to pick up the slack. So you have certain diversification options. You have public, which is like something like a REIT, right? Or you have private, which is something which I do, which is syndication. So passive commercial real estate investments are available in both the public with the REITs and private markets, but how do they stack up against each other in terms of diversification and the ability to withstand market downturns? Well, head on over to my Bigger Pockets blog. The link will be in the comments where I write you some great pros and cons of both REITs and in syndications. And, just talking about just in general, real estate, private equity. So, what I want you guys to think about is to achieve true diversification that will preserve income and insulate it against downturns and volatility. Look beyond your local market and beyond your core competency. Seek out seasoned and experienced syndicators and managers who have been around the block and know how to navigate their way around a crisis. Screening and selecting competent management will be the key to your diversification goals. Go on over to livefreeman.com, livefreeinvestments.com. Reach out to me on LinkedIn, Instagram, social media, Facebook, soon to be TikTok, as soon as I can get that going. I'm not sure what I'm going to do on TikTok, but reach out to me. I want to hear your thoughts on diversification. I'm filming this right before Christmas, so I hope you guys have an incredible holiday season and a happy new year. Talk to you soon.